Welcome back to the channel, folks. This is daily update from Mullen stock. A lot of people are worried about Mullen doing a reverse stock split. So let me explain something to you guys. A reverse stock split is not an issue. Okay. The reason it's done is because New York Stock Exchange do not want companies to be traded on their platform that hold a valuation under $1. So let's say, for example, if you have a company who's trading for 25 cents for a long time, they might send them a notice saying, hey, listen, you got 90 days to bring your act together. Bring up your valuation to $1, meaning your share needs to worth at least $1 or more in order for you to trade on our be traded on our platform. Otherwise, you got to get off. Okay. What do? They take multiple shares and combine into one. It could be 7 to 1, 5 to 1. So for example, in this case, let's say if Mullen was to do it, let's say if they get a notice from the New York Stock Exchange saying, hey, listen, you got to bring up your valuation to $1 for each share. They will combine 4 shares. Right now, they're trading around 23, 24. Yeah. So they might combine 5 shares into one. You as a holder is not losing any value on your amount, because instead of holding 5 shares, now you hold 1 share at $1 instead of holding a 5, at 25 or 5 at 23 cents or 22 cents, whatever that number is at that point. So basically you're not losing any value. However, if they keep coming down from $1, let's say they do a reverse split and they keep coming down, they might do another reverse split. So I've known a company that does like 3 or 4 reverse split to be able to stay there on the exchange and to be able to get traded on that exchange, So it's not a bad thing. And on the opposite, it's a stock split like Amazon did, right? Because there's a bigger pizza. They want to cut into different slices so everybody can get a piece. So they split it into like 7 to 1, for example. Reverse is the opposite. You have many pieces, you combine into one. So reverse is not a bad thing. So you don't have to worry about that. However, I do have a couple of levels that I want to talk about. Before that, I just want to make sure you guys understand the stock is, I'm very bullish on the stock right now for next month. The reason being is there's 2 factors, right? First, this stock is a long-term play for me. Okay. Now people are talking about just short interest. Short interest is fine. But right now, the fee for the CTB is 19%, which means institutions are not looking to short the stock. They're not trying to kill this company. 19% meaning is nobody's calling in the broker and say, listen, Mr. Broker, I need 5 million shares that want to short. They're not doing that. They're probably shorting the stock. They're probably coming out of the position. A lot of stocks are being sold. It doesn't have to be all shorted, right? There's a lot of people coming out of the position as well. As I told my other video, that most of the people that hold in the stock are not institutions. Those are the retail investors. A lot of investors get, frustrated. They're like, you know what, I'm out of this position. They sell off, right? They sell off. And that usually can happen as well. It doesn't have to be shorting all the time. It could be regular course of business that people are just coming out of the position. Simple as that. So coming back to the CTB is 19%. Nobody's trying to kill this company. The company's already down to 25 cents, as we already know. So let's go back to the institution holding for a quick second. BlackRock, 26 million. Vanguard, 45 million shares. Okay. And you have Morgan Stanley, I think about 1 million. State Street, about 5 million. Northern Trust, about 2 million. There's a lot of institutions still holding a good chunk of shares because, look, a lot of folks knows that EV is the future. Okay. And next month is going to be very crucial because I'm very bullish on next month. I made a video yesterday as well. A lot of good news coming out the first week of next month, March. And these are my levels right now. This is a demand level. I have 21 cents as my demand. I think this 23 cents, between this 23 cents and 21 cents, this is a zone right here. I think there's a lot of people sitting here trying to load up on this price. Even right now, 23 cents is not really coming off of 23 cents, but I do think the stock might come a little more down next few days. But there's a lot of supply levels here, which means that when the stock gets to these levels, there are a lot of sellers sitting here trying to sell you the stock, so they want to come out of the position. There's a supply zone here, supply zone here, supply zone here. However, in March, when they do have this conference where they're going to showcase, and they're hiring a lot of engineers as well. So they're trying to make moves here, right? I do feel that March, maybe the month that we get to see $1 for the stock. But I'm very optimistic. I just want to make sure you guys understand this, that not everything is bad about the company. There is good in the company. There's a lot of people involved in this. A lot of institutions having a good large sum of shares in this because they do feel the company might be able to survive this, might be able to come out of this, but we'll find out as we move forward. But I'm bullish on the stock right now. Hope you like this video. Give it a thumbs up, and I'll talk to you guys in the next video.